Hi friends, welcome to our Tax TV channel. Budget 2023, the 24th of May Unveil Roadmap for OECD's Pillar 2. The OECD or G20 Inclusive Framework is aimed at equipping governments with domestic and international instruments to tackle tax avoidance by firms operating in multiple countries. The Union Budget 2023-24 is likely to announce a roadmap for the implementation of the Pillar 2 solution of the Global Anti-Base Erosion Rules (GloBE) of the OECD and G20, which seeks to ensure that multinational corporations are subjected to a minimum effective tax of 15% in every country they operate.
While a change in the tax rates through the finance bill is unlikely, India's corporate tax rate is anywhere higher than the Pillar 2 threshold. Finance Minister Nirmala Sitharaman is expected to initiate work on Pillar 2 compliance and give some guidance on how the relevant proposals will be taken forward in the domestic context. The OECD or G20 Inclusive Framework is aimed at equipping governments with domestic and international instruments to tackle tax avoidance by firms operating in multiple countries. The Pillar 1 will seek reallocation of consolidated profits of multinational enterprises to jurisdictions where their products and services and ensure standardization of the remuneration of routine marketing and distribution activities. This is seen to be effective given the rapid expansion of digital economy.
It is expected that the Pillar 2 of the GloBE may be implemented sometime in 2023, but the OECD first has to release an implementation framework and rules. Implementation of Pillar 1 is likely to be delayed to 2024. Pillar 2 aims to levy a global minimum corporate tax of 15% on any company with over 750 million euros of annual revenue. Over 135 countries have signed up for this plan. Experts believe that an announcement in the union budget is expected to give clarity to Indian and global multinational companies and could possibly help them prepare for the new system. A proposal for setting up a committee to look into the implementation or come out with a draft report would also be a welcome move, they said.
There is an increased momentum on the implementation part for Pillar 2. Recently, in December 2022, the OECD published new Pillar 2 documents as implementation package covering guidance on safe harbors and penalty relief, the information returns and tax certainty with respect to the global minimum tax rules. India has committed to roll back its unilateral taxes such as equalization levy once the Pillar 2 is in place. However, it can be expected that there should be an explicit clarification as well by the government that the equalization levy (EL) is a temporary measure. In order to put these things to perspective by bringing policy changes, it seems India is adopting a wait-and-watch approach. Where many countries have come out with draft changes to their domestic tax law through a consultation paper, it seems India is waiting for the announcement of OECD of its implementation framework of Pillar 2, he said.
Equalization levy was introduced in India in 2016 with the intent to tax cross-border digital transactions. It was seen as a temporary measure at the time. The government then introduced the concept of significant economic presence. Experts have also sought clarity on these issues. Guidance on applicability of equalization levy for the digital economy and e-commerce sector vis-a-vis adoption of Pillar 1 will mitigate duplication of taxes. For consultation, contact online tax specialist 22@gmail.com. Please subscribe.